In this video, you are going to learn more about Jesse Livermore and his trading tips. Jesse Livermore is one of the greatest traders that few people know about. While a book on his life, written by Edwin Lefebvre, Reminiscences of a Stock Operator, 1923, is highly regarded as a must-read for all traders, it deserves more than a passing recommendation. Jesse Livermore, who is the author of How to Trade in Stocks, 1940, was one of the greatest traders of all time. At his peak in 1929, Jesse Livermore was worth $100 million, which in today's dollars roughly equates to $1.5 billion. Jesse did not have the convenience of modern-day charts to graph his price patterns. Instead, the patterns were simply prices that he kept track of in a ledger. He only liked trading in stocks that were moving in a trend, and he avoided ranging markets. When prices approached a pivotal point, he waited to see how they reacted. For instance, if a stock made a $50 low, bounced up to $60, and was now heading back down to $50, Jesse's rules stipulated waiting until the pivotal point was in play in order to trade. If that same stock moved to $48, he would enter a trade on the short side. If it bounced up off the $50 level, he would enter long at $52, closely watching the $60 level, which is also a pivotal point. A rise above $60 would trigger an addition to the position, pyramiding, at $63, for example. Failure to penetrate or hold above $60 would result in a liquidation of the long positions. The $2 buffer on the breakout in this example is not exact, the buffer will differ based on stock price and volatility. One wants a buffer between actual breakout and entry that allows them to get into the move early but will result in fewer false breakouts. While Jesse did not trade ranges, he did trade breakouts from ranging markets. He used a similar strategy as above, entering on a new high or low but using a buffer to reduce the likelihood of false breakouts. The trading rules that follow are simple and have been included in many trading plans by many traders since they were created nearly a century ago. They are still valid today, and were created under Jesse's truism: there is nothing new in Wall Street. There can't be, because speculation is as old as the hills. Whatever happens in the stock market today has happened before and will happen again. A couple of Jesse's rules. Trade with the trend. Buy in a bull market, short in a bear market. Don't trade when there aren't clear opportunities. Trade using the pivotal points. Wait for the market to confirm the opinion before entering. Patience leads to the big money. Let profits run. Close trades that show a loss, good trades generally show profit right away. Trade with a stop, and know it before you enter. Exit trades where the prospect of further profits is remote, the trend is over or waning. Trade the leading stocks in each sector. Trade the strongest stocks in a bull market or the weakest stocks in a bear market. Share in the comments below if you'd like to see a part 2 of these series. Thank you for choosing Financial Data.